You are looking at a daily chart of the Nasdaq. Today is Thursday, May 23, and the Nasdaq traded at a new high today and then reversed lower, still well above its moving averages here. The index fell 65 points or 0.39% and closed at 16,736. So if you just take a step back and look at the bigger picture here, the Nasdaq has been in an uptrend for a while. It entered into a power trend on Monday and now is making new highs. Yeah, it gave some back today, and it was actually down a little bit yesterday. But you got to expect some profit taking into the 3-day weekend, especially after this big move. So the trend is still our friend, and don't panic because your stocks might have sold off today. I don't know, mine. We had a pretty good day, but uh they didn't close at their highs, obviously, and it did pull back a little bit. But as long as the low of the session stays above the 21, I think we're in a pretty good trend right here, and you got to expect some profit taking along the way. And also, it's really, really important to be selective. The two criteria that I have for making money in stocks is identifying the market direction, which we know it's trending higher, and then selecting winning stocks and buying them at proper buy points. You don't want to be chasing stocks and have them reverse on you like they did today. So anyway, that's the Nasdaq. Yeah, it's been down the last couple of days, still in a strong power trend. And the S&P, I'll do this quickly. The same thing, except it's a little weaker than the Nasdaq, because this thing closed right at its 10 EMA. I've got to go back to the Nasdaq. Sorry for toggling back and forth here, but I just wanted to show that the Nasdaq closed 0.6% above its 10 EMA, and the S&P closed at its 10 EMA. There you can see the green line, 0.6% above. So it's a little stronger than Nasdaq because the QQQs, the Mag 7, Nvidia, and those stocks are powering the Nasdaq. They're also in the S&P, but S&P has a few more of laggards. And then we have the Dow, which really sold off sharply today. That's when I first noticed, like, man, market is not that strong. These big industrial stocks were selling off. This thing closed below the 21, so that doesn't look good for the Dow. I'm not sure what that's about. There's only 30 stocks. Maybe they need Nvidia. And then the Russell sold off 1.6% down to its 50, so the Russell doesn't look good. So right now, it's pretty clear the Nasdaq is the leading index. And the stock of the day, I guess you could say, is let me get that out of there. Nvidia, which popped out of this base here. Talked about the base with the 974, the old high there. It just powered through it, so really difficult to buy there. And today it just traded in a range of what 1,015 to 1,063. It was up 9% with volume. That's a big move for a company this big, but they're delivering, increasing margins here. You can see the margins from 64 to 70 to 74 to 76%. The triple-digit earnings and sales growth. This is really incredible. We've never seen anything like this before, a company this big delivering triple-digit sales and earnings growth. But you can see it broke out of the base. The RS line, powering through the moving averages. And if we look at the weekly here, and you can see this earnings line just heading straight north, and the stock's going with it. I mean, that's we talk about that all the time. You got to have the earnings, to make your stock drive higher, and that's what's doing it for Nvidia. Pretty tough to buy here. Probably a lot of people are trimming. If you had it at lower prices, and this thing's just becoming a behemoth in your portfolio, you got to trim a little bit. You don't want it too big in your portfolio, but I think it's owned by a lot of people. But I got to point out, though, I was listening to some people talking about it's being over-owned, and it just, people don't do their homework. I mean, they're talking, I better be nice. They're talking out of turn, okay? Nvidia is owned by 7,348 of these the fund ownership summary that we can find here on Market Surge. And yeah, all the big ones have it, but they can increase funds, okay? So 7,348, that's a lot of funds. And that was, back in March. We'll get another one here in June, I believe. And then I want to show Microsoft here. It's owned by 10,284. So there's 3,000 more funds owning Microsoft than Nvidia. So which one's more over-owned? I would have to say Microsoft. I like Microsoft. The chart looks great, but it's not Nvidia. Anyway, just wanted to point that out. Nvidia is not over-owned. It might be overbought, short term, but it's not over-owned by mutual funds, and there's a lot of growth left in this. Somebody contacted me today and texted me saying that this reminds him of Tesla back in 2020 and the 2021 run that it went on, and Nvidia is a lot different stock than Tesla. But I think his point was that this is a stock that everybody wants to own. So anyway, enough of that nonsense. So Nvidia has this halo effect, and I think there's three themes that are running through this market that I think are really investable, and we need to be invested in. One of them is, of course, the AI, and you want to be owning the leaders of the group, and that's certainly Nvidia. Applied Materials, a lot of these semiconductor equipment, semiconductor fabless names like AMD, another one. This one reversed lower today. Broadcom is another one. This chart looks really nice, probably on our ready list next week. Taiwan Semiconductor, just a lot of these AI plays. This one looks fantastic as well. So there's the hardware and software for AI. The data center plays, I've got to get to Vertiv Holdings. This one's just grinding higher. I thought it made a new high today, 105.64. Yeah, I made a new high and then reversed lower like everything else and closed at 3% of its daily range. So that's a poor close. But we're going into a 3-day week, and there's got to be profit taking. This thing's up a lot. It was 72 back on April 23rd. And a month later now, it's 101. So, you got to take profits along the way. Those people who contacted me on Twitter or X today, I said, you do have to trim some along the way, and that's what everybody's doing. But this sell-off today or whatever was just, it was expected. It was minor. It was tame. And when your stocks and your index are not going to go up straight every day, there's going to be pullbacks. There's going to be profit taking, and so you just ride the trend, and the trend is higher. This is POWL Industries. I like this one. This is another one of the data center play, which is one of the themes that that I like. And there's also the software names like ServiceNow. Elastic is another software. There's a lot of software, and there's a lot of hardware names that are benefiting from AI, and Nvidia is the big king. But I still think we're in the early innings of this stage, this new AI revolution. And anyway, the next investment theme that I like is the energy that needs to, drive this AI revolution. And Constellation Energy is certainly one that I like. They have a nuclear component, and you could just see the trend is your friend here. There's nothing to do here with this one. As long as it stays above the 10, you just, kind of hold it. And if you bought the breakout here, if you bought it back here, I mean, you're sitting pretty with Constellation Energy. This one looks fantastic. VST, they recently bought a company out of Texas. I forget the name of the company, but it's got a nuclear component to it. And so that's part of the reason. It was back in March that they bought this company. It just ramped higher. You got that one pullback, but it's still trending higher. This looks like a little shelf type pattern. And this one looked like it was ready to bust out today. But then, of course, the pullback at the end is still close, 64% of its daily range. So Vistra looks really good. And this is another one of what I would call the second part of the AI theme, the auxiliary plays from AI. It's powering the data centers and powering the AI revolution. Quanta Services is another one. I'm not going to get into all of them, but this one to me, just pushing away from a base here. Quanta Services looks pretty good. You can see the group is uh, highly rated group. STRL is another one in that group, and it pulled back to its 10 today. This one looks fine. It broke out on earnings, just pulling back. So you kind of have your pick here, and I really can't tell which. I like Constellation, but I mean these all look good to me, and you can see the trend here on Eaton. This is a more diversified power play, but certainly it's trending in the right direction. The trend is our friend. And so you just keep riding the trend. I don't want to get, too stupid bullish or anything. Definitely guarded, definitely selective. You have to be selective. You have to buy it, proper buy areas and buy the proper stocks. There's a lot of stocks not doing well. And we saw that today. Anyway, the last theme, or the third theme, I shouldn't say the last because there's a lot of things doing well, but is the weight loss drugs that I think is sustainable, not just a 1 month or a couple quarters rally, like I think we might be seeing with the miners. I think these are multi-year plays that you can hold and not pay Uncle Sam as much in taxes. This is Novo Nordisk. This is setting up in a base. And I love stocks that trade like this. It's just real tight, tight trading. It's not going all wild up and down like our SMCI. Didn't show that one. It got hammered today. This is just a nice tight trader. It's not going to, bust out and go crazy like Nvidia, but it looks to me like it's ready to break out of this base. And anyway, a nice pullback to the 10 would be welcomed. It's 2.1% above the 10, 3.7% above the 21. This one looks fantastic. And to me, there's only two weight loss drugs to buy. It's Lilly and Novo Nordisk. I know that HIMSS came out earlier in the week, and they're selling something that's not approved by the FDA. I don't even know if they're selling it yet. They said they're going to, but Lilly looked like it was going to break out on Tuesday, and it pulled back, closed at the middle of its range. Looked like it was going to break out today, made the high of 820, and then pull back, closed 34% of its daily range. So this is like, to me, this is foreshadowing a move higher. I mean, when Lilly moves, this one can really move, big moves in a day. And big moves you can see over here over weeks and months. Okay, so Lilly is definitely one to watch, one that I have on my ready list. Both of those, NVO and Lilly, look set up in bases. And this is what I'm talking about, buying, quality stocks near proper buy points. You're probably not going to get hurt too bad if you're buying quality stocks near proper buy points. Anyway, that was my third leg of my investment thesis for this bull market. The data centers and the hardware, software, and then the energy plays with the data centers and the weight loss drugs, which to me there's only two. But since I'm on the drug theme, this is what I'm talking about. This stuff drives me crazy. NBIX, this is the fantastic company. They've got plenty of earnings, plenty of sales. The stock just can't go anywhere, and it's just been trading sideways and has these wild swings. It looks like it's going to move up, then it pulls back under the 50. I just cannot stand stocks like this. Move, right? Move or don't, but kind of sideways action. You can see the earnings lines heading north. This is a good company, but just cannot get out of its own way. And the other one, and well, there's plenty that I like, but this is one that I like currently near a buy point. This is Vertex. They have a pretty broad catalog. They, mainly their revenues are from cystic fibrosis, but they have a broad catalog of drugs. And this one is near a buy point. I thought I was going to come down and form a handle, but not all stocks form handles, and this one might just take off. This one marches to the beat of its own drum, so it's going to do what it wants to do. Pretty tough to trade this one. Anyway, I'd mentioned SMCI earlier. You can see the tight trading in Vertex and Lilly and Novo Nordisk, and this one's wild all over the place. It's having trouble with this downtrending 50. I know that the 10 and the 21 are uptrending. This is downtrending, and this is a bad looking candle here today. Wow. Yeah, down 2% with Nvidia ripping like that. Made a high of what, 972 and closed at 847. Wow. That's tough to take. So anyway, I'm going to move on. I digress. I wanted to get to a couple stocks that I've had on my red list that are doing well, but I would say, this is profit taking zone here for Celestica, CLS. It's just moving, a little too fast and a little too far away from those moving averages. Yeah, it's 11, nearly 12% above the 21. So if I had that one, which I don't, it was on my red list, I didn't buy it. I don't buy everything that I put on my red list. I couldn't. There's too many. But to me, that looks like it's ready for some, trimming, like a Thanksgiving turkey. NTAP is another one that has done well, and just, we saw some profit taking today. Wow, it closed. I saw it. It was up pretty good today. 115.95, closed at 104, 10% of its daily range. So somebody's got ahead of me. They're profit taking. That's a smart thing to do. You got to take profits. These things aren't going to go to the sky, and take some profits along the way. And the last one was a CAMT. This one has been phenomenal. It was on our ready list last week. I don't think I had it on this week. It got a little extended here. Yeah, 16% above the 21, pulled back a couple days, didn't even get to the 10, and now just it wants higher prices. And you can see today it closed at 51% of its daily range. This one the trend is definitely your friend here. Yeah, CAMT looks pretty good. It's a less than 5 billion market cap. And anyway, that one will not be on our ready list. It's getting a little too far extended here. Once again, it's 12.6% above the 21. So take profits. All right. Okay. I wanted to get to a couple other names here. Somebody asked me to look at this stock, ALAR. This is a computer software security name. The group is, middle of the road, Israeli-based company. I checked their website, legit company, very, very tiny, market cap of 200 million. They reported earnings recently. They were pretty good earnings, 48%, sales growth, 39 to 48, looks fantastic. They got earnings. This looks like, a really good company. It's, just tiny, right? It's a micro cap company at 207 million, but you can see this is trending in the right direction, and it's a little extended now, pull back a little bit today, 16.7% above the 21, but this thing looks fantastic, trending the way a trend trader wants it to trend, right? And just buying the pullback, trend higher, buy, pulls back, you buy it, it trades higher. This thing looks fantastic. It's Alarum Technologies. Anyway, another one in the same group is Gin Digital Software Security. This one is a 15 billion market cap. Not an expensive company though. They're doing about a billion a quarter. So you're looking at less than 4 times sales. Set up in the base here, gapped on earnings. Now it's trading sideways, forming a shelf, allowing the moving averages to catch up. This is definitely one for the the watch list. Keep your eye on this one. Once the moving averages catch up, we might catch a bounce and trade higher above that 24.37 level, which was that would be your trigger area. And the last one, of course, is CrowdStrike. I've had this one on the ready list last week. Hesitated to put it on this week, and it's just doing what you kind of expect it to. After a big run from 280, to what, 350, let it pull back a little bit, allow the moving averages to catch up. But you can see it's still, trading pretty tight within a base. Let it come down a little bit, trade sideways, and let it come down to 335 or so. Just tame garden varieties, I like to say, pull back to a moving averages. That's what we want to see with CrowdStrike. All right, I've got to get to my stock of the day. Everybody likes Nvidia. I love the movement in ELF. People were giving me a hard time last night because I was saying that I bought ELF and I expected them to have a good quarter. And then after they reported earnings, it sold off down to like 138. People were saying, this thing's getting a haircut. You stink. Jargon, you stink. I've heard that before. And it turned around. If you listen to the conference call, which I did, the CEO is, the people who follow the company, the analysts, can know he's sandbagging. You know, he's talking about expanding. They're number one in Italy. They expanded into Italy and they're number one brand already. And now they're expanding into Mexico and they're meeting their customers where they're at, like on TikTok and Roblox and Twitch and the younger generation. They score well in all teen surveys. So they were upgraded this morning. I think a couple price targets over 200, 220 at B of A. Yeah, up 18%. But you know, still off that 221 high. You know, the guidance wasn't what analysts were hoping, but I mean, 71% growth. If you look at the numbers down here, I mean, you could say it's decelerating sales growth, but anything over 20% is still, you really can't say it's decelerating until it gets below that area. I mean, we're going to take 30, 40, 50% sales growth, you know, for a few more quarters. Anyway, 71% sales growth, big margins on this company. Yeah, the EPS, you know, is slowing. That's going to fluctuate. They talked about cost, you know, shipping costs, and their stuff is made in China, and the tariffs affect them a little bit. But just the cost of everything, you know, inflation is catching up with them too. But obviously, investors are buying this stock. This is massive volume, 18% move, and that is not to be ignored as it rips right through its 50. You can see the moving averages. Excuse me, the relative strength line trading through the moving averages. And that 182.73, you know, could be a trigger area. But Alpha is not feeling the same effects as Estee Lauder and Ulta Beauty, and that's kind of what my sneaking suspicion was. Anyway, congrats to the long on Elf. Definitely trim some there when it, you know, with a 20% move. You got to do it. Celsius, this stock is looking good. You know, it ran through the 50, ran up near 100, then got rejected. Now pulling back to its moving average and lighter volume. That's what you want to see. This thing is setting up in a base and ready to blast through 100, I think, pretty darn soon. So that one's going to remain on my ready list. I know it hasn't worked out for us this week. It's down 1.4% while the Nasdaq's up, but you know, you got to be patient. I'm going to stay with it. I think that one's going to move higher. Abercrombie and Fitch reports next week, next Wednesday, I believe, the 29th. This one's set up in a base. Once again, you know, teen surveys showed this stock is being bought by the younger generation, and I wouldn't be surprised if they continue their 20% growth here, sales growth, and you know, triple-digit earnings growth. Well managed company. Looking forward to hearing from Abercrombie and Fitch, and of course, you got to go to Costco. You can't forget about Costco and talk about retailer. This is the big kahuna of retail. And just I should have had this on my ready list. It's a slower mover, but it is pushing away from its base. Looks pretty darn good. And then I've got to go to the shoe stocks. On Holdings broke out of the base and just pushing away from its base. Looks good. CROX is still trading within a base, and it pulled back to its 10 EMA this week. And to me, I think that's probably going to get some support there and eventually trade through that 146.79. It's still $4 below it, but to me, Crocs is, you know, got this nice base set up here. Looks pretty darn good. Like to see this earnings line tick a little higher, and they got to figure out their Hey Dude brand before they really take off like another shoe company. All right, somebody asked me to take a look at these shipping stock, CDLR. This one is, and you can see why this one has been a monster stock. Broke out from you know, this base here. It's just blasting higher. This thing's gapping, really gapping higher. Yeah, we're going to ignore the earnings line here, but you know, the price, I mean, yeah, made new high today, so new highs are good. Not going to argue with the CDLR. GSL is another shipping stock. You can see the shipping industry group is, you know, rated 5 out of 197. So this is another one just showing strength. And then the last one I'm going to show, I'm not a big shipper dude, but you know, making new highs and showing strength. I did mention earlier the miners, you know, they fell out. This, to me, this is good. This is healthy. They moved really far, really fast. So they get a little bit of, profit taking, and the money rotates out of these miners, out of these commodities and into the AI stocks. And it's just a healthy rotation, I think. Yeah, the index was down a little bit and these miners really took it hard, but they're up a lot, and typically, miners or commodity stocks don't move this fast. So that's CCJ. All these are just down. I'm just going through a bunch of them. Yeah, sliced to 21 today. This is tech. So anyway, they got hit today. Oh well, boohoo. I think it's healthy. I don't think it's healthy for these commodity stocks to just rip. I think that's real dangerous for our bull market. Anyway, keep the love going, rotate it around. Everybody gets a little taste, and we keep moving higher. So that's all good. Anyway, that's it for me. Thank you for watching. Except for I lied. At mcstockcharts.com, we honor Steve Jobs and always have one more thing. I'm going to start with ROST stores. After hours, ROST stores reported pretty solid quarter, up 7%. It's not a real big, it's not going to give you triple digit growth or anything, but it's a well-managed company. You can see it traded down to its 200 here, and now tomorrow 141. It looks like it's going to drive through the 50. So that'll be something to watch for tomorrow. Workday, not so fortunate. They were making some lame excuses. Yeah. The market has not been punishing misses. So we're going to see what happens to Workday tomorrow, down 10% after hours on that. Then Intuit was, again, making excuses. You can't have companies making excuses. Either you execute or you don't. Either you're taking market share or you're not. And that's what these new data points are showing. Intuit's kind of a seasonal thing with their tax platform. But anyway, down 7% after hours. And the one that I was really interested, I'm going to close on a high note here. Deckers, reported, I would say, a blowout quarter for sure. They raised guidance to, more than $30 in earnings. I mean, I don't know what $30 in earnings is worth this year. They're expected to have, 35 next year, but, the sales growth, I believe, was 21%, which is an uptick from prior quarter, but you got to go year over year here. It was, 8%, this quarter last year, and now 21. So they're growing. They're eating Nike's lunch. They're taking market share. The Hoka brand is just, ridiculously hot. That was a $1 million acquisition in 2013, and it's bringing in $450 million a quarter. So congrats to Deckers for that acquisition of Hoka, and congrats to the longs of Deckers. This is set up in a nice base here. I was tempted to put it on our ready list, but it just, with the wild moves with earnings, I just can't be doing that. So after earnings, say where's the buy point? It was 916. So it's it's $60 above your buy point. So probably gonna have to say, congrats to the longs and just move on. Or, you could always buy an auxiliary play, maybe some pen action and CROX here. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.